concentrating again. I had something I had to just go away and do for about half an hour. Yeah, it kind of threw the backtesting video off a bit, but it is what it is. Unfortunately, real life gets in the way when you're backtesting, just as it does when you're on the charts. And at the moment, yeah, that's sort of unfortunate that things are going on outside of the charts that I have to concentrate on. So yeah, so we're just looking for another daily level to trade off now. There hasn't been many daily levels in this pair so far, and it's been quite bad to backtest. So as you can see, what I mean by that is no internal to external prices, just sort of printing, taking sides and going higher or going lower. We do have this level here. Let's see what happens. Okay, we printed one higher. So what we can do is we're going to go off the most recent one to price. But yeah, not many setups so far, which is a little bit annoying, especially when you're actually going over data in real time. It can be annoying, but you can just go about your life and carry on doing things. When you're backtesting, it's very frustrating because you're literally looking for setups, you're just hunting them. So yeah, we can just start looking for the basic setup that we require. We want to see that Asia low taken like that, hopefully, and we did engulf to the upside. Now, this one's going to be a little bit weird. Unfortunately, in fact, that isn't even a setup because we have done it, but we haven't tagged the level. So, in fact, it doesn't become valid until the level gets tagged. We need that daily level tagged first, like that. So you see here, actually, how weird that was. We did have that bullish engulfing candle after an Asian sweep. And then we did start to go higher. Obviously, if you'd done this candle, you'd have got cooked straight away. We see how we've left relative equal highs as well. But now that we have tagged in, we could now start looking for the setup. Technically, I'm speaking, you have taken both sides on this candle, I believe. Higher. Yeah, so you did take both sides here, but obviously it looked bearish. It was continuing to the downside, and obviously, if you'd have entered here, you'd be looking like you're probably going to get stopped at that point. Yeah, which did happen there. So it looks like on this specific day, Thursday the 10th, we haven't got an entry, but we have come deep into the daily fair value gap, and also we have this one below as well. So even if this one does get ran, we can still look for that bullish trade higher. But right now, we still respected that level on that current day. So, well, going into the new day, so we can still look for trades off of it. And Asia seems to have done the bulk of the move and has, in fact, done the move at the end of London here. So, yeah, unfortunately, we haven't got a trade here. This is, like I said, the problem with this strategy looking like, obviously, I haven't got enough data to guarantee this, is the fact that Asia seems to do the bulk of the work, with it being a Japanese yen pair. But yeah, this is what I mean about, obviously, my higher time frame analysis is really quite good because I can seem to see the internal to external on this daily level or the weekly levels really cleanly. And what I noticed with my strategy is that I am only making mistakes on the lower time frame. So to eliminate it, obviously enter on the 1 hour if I'm going for a daily level, or a 4 hour going for a weekly level. Now that does mean obviously you're in trades for a lot longer period of time, becoming more of like a swing trader. But at the end of the day, I know my win rate is going to go up, and that's all I care about at this point in my trading journey. I want to be getting the bigger payouts. I want to make sure, obviously, I've been getting consistent payouts and I have been growing my personal account, but I want to make sure that for the long term, especially on my prop firm accounts, I'm not going into too deep of a drawdown, spending weeks and weeks on end trying to pull it out. And I'm just continuously getting them nice 2, 3, 4, 5K payouts on them accounts bi-weekly or every 7 days, whatever it might be. But yeah, so as you can see, obviously we did have the internal to external move, and it played out within 1 day. Okay, so like you wouldn't, if potentially, if we just ignore what is actually on a chart in terms of this being the Asia session, let's just imagine we did engulf here, and this was, we know it's the turning point, but let's imagine this was an engulfing candle, and then you do get this big bulk up. Realistically, you're actually only holding a trade for 11 hours. And I mean, that ain't really a massive, massive problem. Obviously, if you look at the times as well, Obviously, this is Asia session, but if you counted this as a London session here, you've only gone London and New York. So you've just rid the bulk of the trading day in the right direction, which means little to no drawdown, and just way easy on the psyche. You can put it on, put your alerts, and then just walk away from the chart. So yeah, that's why I prefer to trade like this at the moment. I think this is going to be my go-to in the long run, just because it's just so simple and the win rate is very, very high. And obviously, the results do speak for themselves. At the end of the day, we do have, look at the returns. I can't believe what I've seen when I have back tested it. I think it was like 50 or 60 R returns so far. So yeah, I think if I pulled it up, I'm pretty sure I got ChatGPT to actually do the results for me. Um, yeah, but yeah, so obviously we know exactly how much we've won and what the win rate is, and just in general how much profit we're up is ridiculous. And I can show that here, 60% up. So yeah. So yeah, we're just going to continue with it. Obviously, like I said, we got to continue through the pairs, find out what pairs are better for certain sessions, and that's the whole point in backtesting. We're really just redefining the strategy. We've got the model, we know it works, we know it's high win rate. Certain pairs are going to be a lot more active, as we know, and certain pairs won't. And that's just trading in general. To be honest, we know that certain pairs are going to be more active at certain times. So we could have looked for a trade here. It didn't actually happen on the daily. Very sloppy though, this pair. Could we potentially get a trade here? Nope. So you know what I've noticed with this pair is we don't really get many internal to external moves. I mean, this one was clean, but they're very few and far between, to be honest. They sort of shut the gaps on the day, like on the current day. Like the candle closes and the next day doesn't give potential for an internal to external. It just sort of closes the gap in. But it is what it is, really. I mean, look, we're nearly coming up to current day. We've literally got one trade, and even that was a push. There ain't really going to be much going forward, I don't reckon either. And that's what I mean about, like, there you'd be looking, right, we've had a big push up to the upside, potentially another bullish candle, and then leave a gap. It just comes down, closes up the candles, and then goes up or goes down, depending on what it wants to do at that moment. Again, there, same thing. Right, so we finally have left the fair value gap that we could potentially short from. And I do believe this was actually the pair that I took a trade on in October, actually, as well. Like this week, Tuesday. I believe it was Tuesday the 28th or something like that. But in general, yeah, it don't really look like there's many setups. But it is what it is. There's many pairs, isn't there? So we can just continue back testing and go through better pairs. I think the next pair that I test is going to be like a Euro USD or something, a big pair. Okay, nothing on this day by the looks of it. Probably going to leave behind a new fair value gap to trade from, hopefully. Okay, let's jump onto that daily. Right, so you see how now we've had that really bearish move, quite a big change in direction, actually. We was going up for quite a long time, slowly, a few pullback days, but just slowly working our way higher. And then had like 4 or 5 consecutive down close candles, quite big, bulky candles as well. So we can look. I mean, that would still be the level at the moment. Let's push that on a day. Right, so now we now have this level, which is our new level we want to look to trade from. And yeah, not a great pair. I do believe, like I said, that one of the trades I've actually taken this week happened on this pair, so that'll be good to review. London, let's see. Right, so here we do get a bearish engulfing candle, and the Asia level is swept, and we are inside a 1 hour fair value gap inside the daily, and this is quite a nice bearish candle. So now we can actually take only our second trade, which is quite wild. That we've only actually managed to journal 2 trades. Potentially though, this could be quite a nice one if it ran. Nearly 5R would be quite nice. See how this reacts. Like to see London do a bit of the move because I expect New York to do some sort of push. Right, so obviously some sort of news took us out on New York. And what I meant by the push, obviously, you can see that we sort of consolidated after entry, which is never really a great sign. You kind of want to see a move like that as soon as you enter, so you know that if you do get some sort of liquidity sweep in um, New York, that you're not going to get taken out. Obviously, realistically, before that big news candle there, we were sort of just around break even anyway, so you can't really move your TP in that at that point, or your stops even. So yeah, we just take a loss on it. Let's get that journal. Friday the 3rd of October at 3 a.m. There isn't much here. There really isn't. I really honestly think, was it a Friday? I might not even be keeping this in my data, to be honest. It just literally, there's not enough big enough pull to even warrant keeping it. And at the moment, it's just minus 2R as well, so it don't really have it much to it, to be honest. We'll keep it in there at the end of the day. The video's there anyways. We'll keep it there. It don't look great. It's a bit frustrating to look at because obviously it's tacky as well. Let's see how this day closes. If it actually disrespects it, because we need to note that down as well. We close inside the daily level, and we did, right? Okay, so the daily level's still being respected. Yes, it has gone quite high into it, but it does have this one up here as well. Again, if it comes all the way up here, that's going to leave potential bullish ones, and you're sort of going against your bias, or you kind of caught in trapped order flow. And I'm not going to be looking to trade like that. So let's see how this. That's why I like to trade, obviously, based on the most recent fair value gap that gets created. What's going on here? Oh no, price isn't moving forward. Oh, there we go. Right, so yeah, we're on to the next day. What is going on here? Price really doesn't want to move forward. Not been great this backtesting session. It's first one back. I really ain't locked in completely as I was at one point with the backtesting. But yeah, it's just literally smashing through it at this point, to be honest. Getting the data. We're up to current day, for God's sakes. I don't actually know where we was. I think we was at. Oh, right, okay, that's handy. Right, and as you see there, well, price did play forward. That's why I didn't see it, because I was so zoomed in that massive, huge gap to the upside. So in fact, price did play forward. Look, wow, Jesus Christ, that's a mental move. Even the opening gap was over 160 pips, where price is on that day, on the Monday, I'm believing. Yeah, 300. Jesus Christ. Yeah, I don't think there's going to be much here for me. You got this level to trade from. I'm not going to, I don't think. Yeah. Yeah, and then this is really coming up to current price, because I remember seeing this big gap, actually. Yeah. So we're up to current price. And what I can do at the end of this video is I can actually show this is the trade that I took Tuesday the 28th. So I was correct there. And what I'm going to show is why I took it and what I actually took. And I'll see if I can actually get the same trade again, like without going back on my journal. And then I will show my journal and explain the trade. But yeah, it was a really nice setup, and I'm going to explain that here. Let me pull price back. Obviously, you can see it won. I know it won because I was in the trade. Let's go. Yeah, so let's start the week here. So obviously, this is the gap that opened up that I had marked out, just exactly the way I do even here. And all I was literally looking for, or waiting for, in fact, was my alert to go off at that daily fair value gap, which it did do on the Tuesday. Tuesday, I think it was New York session, just the start of New York. Let's see. So we're in Monday. Push price. Keep going forward. Again, nothing for us here. Yeah, we haven't tagged into the daily level, and obviously, again, like I've said, the impatience on people trading would get caught up in this chop. We don't need to be involved. Price hasn't come into the level we want yet, so I'm literally just waiting at this point, which is what I did. And the good thing with this is, at the end of this backtesting video, is showing a live example, and I will show my journal with it once I actually go through and show the trade. So obviously, here we go. Tuesday, we tag in the Asia session just before London. And then what happens is London reacts here, or does what you want to see, obviously. But we're looking for an engulfing candle, ain't we? So what happens is London keeps printing around. And then here at the end of London, we get this engulfing candle. Now, I didn't take my entry off that. Why didn't I take my entry? Because it's 5 o'clock. I don't trade off in that at the end of the London session because of this gap here, 6 a.m. I wait for New York to actually start and open. New York opens up, and then we get this bullish engulfing candle. Now, being in real time, looking back at this even now, this is the first time I've looked back at it, obviously, in this sort of backtesting format. You could take this trade, and the reason I don't take it, obviously, like I said, is because one, look at the time, it would be a 6 a.m. entry. I don't even enter at 5 a.m. So, yes, price has done what you expected to do. It's took liquidity in the form of this sort of swing point here. We are inside, obviously, at that point, not really inside a fair value gap, but we are there. So, why did I want to take price from this level, even though we have this low here? Well, because the ideal situation isn't to go right to the bottom and completely fill fair value gaps. When we're anywhere inside of the daily level and we have a 1 hour engulfing candle, whether it's bullish or bearish, but this example is bullish, obviously, I'm looking to see price react to the upside in this instance. One, because we have London's high here. Two, we have Asia here. And then obviously you have the ultimate external range, which we might draw. Yes, why did I not expect this level to get taken? It's not even so much when I entered that I didn't expect it to get taken. The risk to reward with the data that I know I have shows that price is likely to react from the higher time frame level more than again seek lower prices. If price did come lower, and let's say this candle rips lower and then goes up, then I'll just enter again. And that's the good thing with this. You've got a bit more time. You're on the 1 hour chart. You're not really rushing to get entries. And if you miss it by 10 or 15 minutes, even, you can still enter the trade, long as it shows the direction. And what you can do is, if you're on a 1 hour, and let's say, I don't know, for example, this is obviously going to be the 10 a.m. candle. Let's say you come on the charts at 10:05 or 10:10. You can still enter this trade if price hasn't disrespected the low. So you could drop down to the lower time frame. You probably most likely see the lower time frame market maker buy model in swing as well. So you have some sort of market structure shift and a fair value gap on a lower time frame to enter off. So obviously, ideally, I was looking to run this trade, 50% of this trade up to about 5R. What I did have was the 2R level marked out, which was here. Why did I have that level marked out? Well, like I said, the first main draw on liquidity was this London high. We are coming down, so I was obviously expecting price to have some sort of retracement. This could just be a pullback and continue lower, or it could literally be the turning point and price continue right up to the external range. Either way, as soon as we hit 2R, I confirmed 1% anyways. And then I let the rest run. And what I'm going to do is print price forward so you can see it. So obviously, perfect reaction. Two absolutely monster candles that just ran into the direction we wanted to see. As you can see, we was floating 2R. I took out 50% of the trade. And then price sort of just finished up around, where did I close out? Yeah, here. So the day ended. I closed out on this candle just before the new day opened in one of these two candles. I believe it might have been right at the top of this candle, to be honest. So obviously price did come back into the sort of level we was trading from. But look at the reaction it had. Okay, so we did indeed print 1-2 candles, perfect timing, 10 a.m. New York time, which is where the most of the volume in the market was, and obviously price absolutely obliterated to 2R. You could have closed at 2R, be done for the day just off them 2 candles. Again, what I'm saying about moves that are correct are not that long. You look 1-2 hours in the trade and you're out. Or you can do what I do. Obviously, I do what I do in terms of letting 50% run because I've seen the data and I know how much like potential absolute monster trades you can get. And at 50% running is a lot. If you're trading live accounts like I am, you can run quite a lot of percent gain just off in the background and you literally can't lose because you can go break even and you've already confirmed 1% on the move. I'm happy to make £1,000 on my 100k live, for instance, and let £1,000 run and lose the other £1,000. In fact, if it comes all the way back to break even, I'm more than happy with that because I've already locked in £1,000 for the day. And literally in this example is exactly what happened. I locked in £1,000 in a 2-hour period on a live account and on a couple of phase 2 and phase 1 accounts and a prop firm, which I can now probably be looking to maybe get a payout in the next few weeks with. But literally, I locked in £1,000 on all of them accounts in 2 hours, and I let over £1,000 just run around and sort of play until this level, and then I ended up closing it out for the old 2R reliable, anyways. But what I want to show is example here, 10 a.m. Okay, we entered, we did sort of catch the low. Price didn't really wick down too much. It did a few pips. But what I want to show is if you drop down to like a 15-minute, I don't know if this is the case because I haven't looked. Okay, but 15-minute, if you was looking to trade this, you'd be here. Okay, we're coming in at 10 a.m. candle. So let's just mark up where we're actually looking. Okay, so this is that 10 a.m. candle, and that's where we're looking, obviously, for price to react. For our entry, that is where we entered, obviously. So why do I enter off the open? Okay, well, as you can see, look at it. We open up, price don't really wick down, and we haven't had a market structure shift at this point. We've got no fair value inversions. We've got no fair value gaps. Okay, so potentially, and what's been happening, obviously, is I'm missing out on this big move. Okay, and then I'm looking now. Look at the time, 11:45. There's no entry. Price then really doesn't do anything all the way until the end of the day. If we drop down further to a 5-minute, there may be an entry. I haven't looked again, like I said. So 10 a.m. we swept that low. We do have a market structure shift here. Okay, but again, we have the market structure shift, which is perfect. There's no clean fair value gap to enter off. 10 a.m. price lingers in, doesn't really do anything. We do have slight gaps, and I mean real slight. They're really small. You could drop to a 3-minute and potentially see a nice gap. Okay, so now we're really starting to go and do some proper work on the charts. Do you see what I mean? Like we're coming in, and there you go, perfect. Call price bounces perfectly off the 3-minute level. Okay, look, 10 a.m. candle opens, boom, tags in 50% of the equilibrium as well. Bam, reacts off. I don't want all this noise anymore. These charts are just noise. There's literally no difference of entering it off the open. Yes, sometimes you're going to get trades on the 1 hour. Well, if we use the 1 hour for example, let's just do it over here on the drawing. Sometimes you're going to get trades where, let's say this is the new hour. Yes, this is what happened in this example. We come down tiny, we went up a lot, okay, and then we come back a bit, close like that. Some trades you are going to get, obviously, this is your open, and then price will dig quite low, then make its massive move to the upside, or any move to the upside, in fact, and then obviously you could have got a better entry down here. But why risk missing out and the ease of entering on the hour? You could just enter and be done. That's it. You can walk away. Stops at your level, TP at your level, alerts on. For the potential that, okay, again, perfect example. 10 a.m. you enter, boom, stops here, take profit here. You walk away from the chart. Alerts go off at stops. Alerts go off at 50%, whatever you want. 1R, 2R, whatever you might do. Why would you not want that ease of life and sit from 10 a.m. when I've already entered and gone about my day? By 10:30, I'm in the gym or doing whatever I want to be doing. If you're not, and you're on the 1 minute, 3-minute, or 5-minute, you're literally sitting at 10 a.m. and you're waiting. This is 10 past 10, half past 10, 35 minutes past 10, 10:37, and then boom, you enter your trade and price comes up. But it's pointless. You're sitting around waiting for things that you genuinely make not much difference to your trade. And in fact, by not going down to them time frames, you have less time on the charts, more accurate entries, way better proven data being on the higher time frame. In this model, I don't know about other people, but for me and my model, this is obviously the most accurate way to get higher percent wins, more win rate. It's just so much more productive. So yeah. So this was a trade I actually took live. What I can do is actually go and show my trade. So if I pull this up onto the opening full screen, let's go through and show exactly what I did. So obviously, again, look, first trade back. I haven't been in on the markets, and here we go. This is it. You can see the move. This was it live. As you can see, look, 10:57. I didn't actually show my entry because I was busy doing something. I entered, I went away doing my thing. I showed it the next hour. Again, like you can see, my 2R level target was up here, okay, above the London highs. I had an alert on at London to show, okay, London high is going to go, like, been tagged. Maybe we can look to go break even. The only difference with live trading to back testing is there's real money on the table. So once that liquidity level did get swept, with it being so close to 2R, I don't think I did because it moved really fast. But in future or just in general, with it being that close, I probably would trail the stops up to break even just because it's literally so close to the level. You might as well just be safe than sorry. And if it comes back, it comes back. It's not a big deal. You go on to the next trade, you get taken out. But yeah, so obviously we've entered here. We're coming up to 11 a.m. and then price has that lovely reaction away. That was just me showing the daily chart at that period of time. Obviously, it's respecting the daily level. And then you can see that 11 a.m. candle just absolutely smashes the TP 2R. And then we are break even at this point, looking for 50% of the position to run to the external range, which is what I noted here. Perfect trade. It's tested on data. 2R, 50% off that break even. Daily level tagged into, and we've now seen that engulfing candle formation on the 1 hour after sweeping some nice lows, and then entry based on exactly like the back testing, to be honest. Lovely entry, lovely trade, and we're now risk free with 1% confirmed, and that is literally top level trades. Okay. We then did have more of a push up on the next hour, which was over the lunchtime, 12 a.m., 12 noon in America. Yeah, and literally, even here's just note to myself, but look at that reaction after that bullish engulfing candle. Okay, it's really, really, really overpowered that candle formation. And then obviously you can see there's quite a time difference. 5 hours later or 4 hours later, whatever it was, we show where price ended up on that day. You can see we're coming up to 4. Well, we're at 4 literally before the turnover of the day. And yeah, so that's why we closed out at 2R. Didn't want to be holding overnight for spreads and things like that. And yeah, it just doesn't make sense to be greedy. 2R, I'm more than happy with 2%. And yeah, just really, really, really nice trade.